Welcome to the Crypto Teacher Stock Channel. And guys, please like and subscribe if you do like what you're listening to. Please inform your friends and family and spread all over social media. It is imperative that we get back to learning finances and understand how the world really works. Because once we understand how the world really works, we understand that everything is planned out. Now, basically, of course, I get into those funny articles first, but we have about 2 or 3 here. We have Republicans silent on Biden's win. So they have not congratulated him, the top ones, like Mitch McConnell. And then also we had Bush come out and say the election was fair. Good old Bush Jr. And then the third one is that the C word cases was the highest, guys. All these Biden ceremonies, they hugging and slapping and kissing. We don't hear anything about the C word then. But all of a sudden, we the 4th highest cases. Come on, guys. You can't believe it. But let's get over into the actual stocks and the news. Stock market doesn't care who the president is. Is that correct or false? Yes, that is correct. Stock market doesn't care because we know what the Fed is controlling it all. Central banks are controlling it. They don't care who the president is. Remember, they run the president. Now, we have Apple and Sony looking at investing in the podcast network Wondery. And we know that when it comes to content, right now, guys, content is king. So if you're looking at starting a podcast, please do. Now we have far-fetched Soar by big investments by Alibaba. Guys, we know, I talked about this hundreds of times, that the Asian markets the emerging markets are going to be big. They're going to replace, of course, the old Babylon, the United States. Now we have Warren Buffett bought back a record of $9 billion in stock. Guys, we know they're simply pumping their own stuff like they've been doing for the past 5 years, but now it's really evident that the Fed and these big corporations are buying back their own stock in order to inflate it to make it look like they're doing great. Come on, guys. It's right there in front of your face. And we know that when they buy back stocks, they're not buying back at that price. They buy with an option, guys, 25 cents. So then therefore they can sell it when everything is hitting the fan. So yes, do not forget about that. Don't forget what they did to GE, guys. Now we have automakers using virtual reality to make these vehicles like the Hummer. So guys, what I tell you, high tech, Facebook, the Oculus, we see the advertisement constantly. Virtual reality is definitely coming, guys. You're not going to know the difference between the two worlds, real or virtual. Now, guys, when it comes to the chip stocks and the healthcare stocks, we know they already pumped chip stocks. And remember, I was a big component, buy chip stocks, and I still am once we get that correction. When it comes to the actual healthcare stocks, yes, you can buy certain ones. Make sure you're doing your research. We know they're still pumping and dumping the C word, so definitely you want to do your own research. I'm not your financial advisor. This is not financial advice. Do your own research and invest. But the fact is that we have to make sure we're looking at technology. The ticker TDOC, we know, guys, teledoctors. This is going to be big. Not just this one, but do your own research on the ones that are coming up. Because definitely people are going to be sitting at home talking to their doctor or on their phones talking to their doctors. It's not going to be any more brick and mortars when you're walking in and actually having a conversation with your doctor. Same thing with medicine. Medicine is going to be sent to you by drones. It's not going to be somebody delivering it anymore. So definitely, guys, look at that. Now, guys, we also had Warren Buffett's profits soar 82% third quarter. Why is that, guys? That's right. The Fed bought it all up. That's right, guys. We know they take care of the cronies. And then lastly, guys, Nikola and Disney earnings. Make sure you are looking at that. Nikola still is a $5-6 billion market cap, guys. And when it comes to Disney, guys, like I said, make sure you do your own research. I'm not your financial advisor. But don't forget, guys, they let all those people go. So that's off of their balance sheet. And then on top of it, they gained when they did the actual Disney Plus. So don't forget about that. But guys, I'm going to leave a very, very important video I did on my Crypto Teacher channel. Don't forget to check that out. about Jerome Powell and where the markets are going. I'll make sure I leave that in the comments. That is a mandatory video, guys. Make sure you check that out. And right now, guys, we have Treasury yields up, but we also have the VIX down. The Asian markets are up, guys. Make sure you're watching CNBC. So that means that in the morning, we will be up. And guys, that's all I have for you. Don't forget to like and subscribe. Get this channel out everywhere. Share it. And y'all have a wonderful day.
We'll start with Ray. Ray's going to share some thoughts about where we are and what solutions might be, and then we'll turn to Ray.
I should explain that my perspective is very much like a mechanic of cause-effect relationships. It's not ideological. But to me, the economy works like an economic machine, and it's a perpetual motion machine. And it has long-term cycles and short-term cycles. I've learned that whenever I made a mistake, many things happened that didn't happen in my lifetime before, but happened in prior lifetimes. So I just want to describe very simply how the machine works and where I think we are, because the same things happen over and over again through history, going back many dynasties in history. First, there are four major drivers. There's productivity. In other words, over a period of time, our living standards rise because we learn how to do things better and we get more output per man hour. Then there's cycles, short-term debt cycle, recession, expansion. Economy becomes too weak, inflation is low, monetary policy creates credit, credit creates demand, and then you have a pickup, tightening of monetary policy, and then we have the recession in those cycles. So that's around this productivity. Around that is also a long-term debt cycle, which is an accumulation of these other cycles, in which then there's a cycle which ends largely when you have a situation where you hit zero interest rates and then you print money and it's not as effective. So we'll talk about that in a second. And then, of course, there's politics. Those are the four things. There's internal politics, people at odds, internally and externally. So I think the period that we're in is unique. Let's say we're 10 years into, well, let's take technology. Technology is artificial intelligence and so on is replacing people, and it's great for the whole, but it changes the nature of the environment, and that's going to have a very important implication in the years ahead. As far as the short-term debt cycle or the business cycle, we're 10 years into this expansion, and many of those stimulants that happen will be dissipating. We won't have more interest rate cuts that are material. You won't have more tax cuts and so on. And this is true around the world as we have our obligations. So we're coming into this period that is sort of a big sag, not a debt crisis in that way, but a lot of obligations that are coming at us, particularly in the mature reserve currency countries. And they include pension obligations, healthcare obligations, and the like, large deficits which will have to be monetized. They'll print money to deal with that. There's a reserve currency issue. That also means that if there's stimulative if you get a downturn, you're not going to have monetary policy work the way it did before. That enters the political realm of coordination of fiscal and monetary policy. It's a new world order. As far as those are the cycle. As far as the politics, naturally, because of this particular dynamic, because of three major factors, there's a wealth gap, a widening wealth gap. And with that, an opportunity gap and a values gap. That's because monetary policy buys financial assets. That makes financial assets go up, and those who have financial assets have a lot of money, a lot of demand. There's technology that's changing that and creating wider spreads. It benefits companies, but it also displaces people, and there's globalization, those factors. And then, of course, we have the external conflict or the issues of the rising of a great power in the form of China rising and the United States having its let's say, relative decline. So we're at a point, I think, that is very similar to 1944. There's a war, after a period of war, there's a period which there's a peace because nobody wants to fight the country that has and won the war, and there's a new world order. And there was a new monetary system. 1944, we established the dollar, reserve currency-based monetary system, and the like. And I think that all of those is going to really change the world order in dramatic ways in the next 10 years.